Hey everyone, me Kevin here. Yesterday we had a substantial sell-off in the cryptocurrency market, not just in Bitcoin, but in Ethereum and many other coins. The entire crypto space had a little bit of a flash crash. And what I'm going to talk about in this video is what happened, why it happened, but then I want to also talk about what this undercurrent is that's sort of happening in markets right now. And that's very important for you, especially if you are investing in crypto or stocks. So the same undercurrent is true in both cryptocurrency and stocks, and I highly encourage you pay attention to especially that, because it could specifically affect you. So let's start by what's happening in crypto, why it happened, and then the undercurrent. So first things first, yesterday we had a big sell-off in the cryptocurrency market. All of a sudden, we saw cryptocurrencies like Bitcoin go from the low 60,000s all the way down to somewhere around 52,000 very, very quickly. Around 7 p.m. yesterday, you had this massive kind of drop-off, and this happens in the cryptocurrency market. But there were a lot of rumors as to what the cause may have been. There were unsubstantiated and still unsubstantiated rumors that the Treasury Department was going to issue fraud claims or potential money laundering investigations into multiple different financial institutions. These are still unnamed institutions, and we don't actually know if the Treasury Department is really doing this, but this was all having to do with money laundering via cryptocurrency, which if the Treasury Department is like, hey, y'all are basically putting illegally created money into cryptocurrency and then using cryptocurrency to cover the true origins of where that money came from, whether it's from something like illicit activity like drugs or whatever, and then kind of washing that money, paying taxes on it via cryptocurrency, and then introducing it into normal markets, that would be very bad for cryptocurrencies. The last thing we want are governments to think that cryptocurrencies are a great tool for money laundering. Now, we already know that this all comes on the back of Turkey banning cryptocurrency as a way of buying and selling goods and services. So on Thursday, we had the buying and selling of goods and services with cryptocurrency banned in Turkey. Then we get these unsubstantiated rumors of a potential Treasury Department investigation. Then we get word that potentially hash rates in China fell substantially for crypto miners because there was a massive outage in a certain province that mines a lot of cryptocurrency. And at the same time, we hear that Binance, or in general, the cryptocurrency market, with the majority generally being Binance since they transact the most, potentially having liquidated somewhere around $10 billion worth of cryptocurrency, which is pretty crazy to think about because cryptocurrencies didn't fall so terribly before this all happened. And so it's weird to me that if cryptocurrency like Bitcoin fell from 62,000 to say like 60,000, all of a sudden we would see a trigger of like multiple liquidations and then liquidations upon liquidations. It's possible that maybe people are highly leveraged up, or they're highly exposed to derivative contracts like options and the cryptocurrency market, which can, like even futures contracts, which could substantially fluctuate in value. But the point is, there are reports that we may have seen somewhere around $10 billion worth of liquidations, which could have potentially been the reason for up to $360 billion of cryptocurrency market cap literally evaporating. Which is also one of the weird things about markets. That is, when markets fall, money can literally disappear. Like, okay, 10 billion people or $10 billion got liquidated, so sold because prices fell. But that led to another $350 billion disappearing just because of market dynamics. It's kind of weird. Then people point to potential Coinbase or a potential Coinbase fallout because Coinbase didn't go the way a lot of people expected it would, and a lot more employees dumped shares than people expected. Maybe the entire cryptocurrency market is a little bit more unstable. Basically, you've just got a ton of fear returning to the cryptocurrency markets. And this is where we kind of transition over to the stock market and currencies like, well, cryptocurrencies together, because when fear returns to both cryptocurrencies and the stock market, one of the first things that people generally do is deleverage. If they can, they try to do whatever they can to start minimizing margin and minimizing leverage. This is a trend that we've talked about in a prior video. In fact, if you haven't seen it, I encourage you to watch it. Just type in, how long will the crash last? Because we're seeing a lot of crashes in specific sectors, especially the SPAC sector. So watch that video, how long will the crash last? Especially at the same time as index funds kind of keep going up, 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 like the S&P 500, NASDAQ, the Dow Jones, right? These guys are just going up and to the right. But a lot of other sectors are in a lot of pain. And so what really seems to be happening is, if the more we get fear, whether it's, again, because of liquidations, of over-leveraged people, or treasury claims, or countries banning cryptocurrencies, or the Coinbase fallout, or drama in the SPAC market, whatever. There's a lot of fear right now. Cryptocurrencies and SPACs, lots of fear. High tech or high PE tech, lots of fear right now. Anytime we see that, we tend to get a deleveraging. And that seems to be what we're seeing happening right now, not just in crypto, but also in stocks. And this is a big red flag if you have a lot of leverage. Right now, personally, my portfolio sits at 21.1% margin. I'm really excited to get this under 20%. It's going to be a milestone for me. And then I'm going to work to getting it under 10% because I've gotten to the point where I want to now scroll back my limit, which usually my threshold for margin is 20%. I don't want any more than 20% margin, but I want to start dialing that back to 10%. Anywho, the big thing here is, keep this in mind. If we go through a massive period of deleveraging, the pain that we're seeing in the markets could stay around longer. And that's a downside. When we're in a period of people paying off debt and deleveraging, money that people make or businesses make or whatever, profits that come to people, don't necessarily get reflected in share prices because people are taking new profits and they're using it to just pay down debt. Which, remember, paying down debt puts zero upward pressure on the valuation of an underlying security, whether that's something like cryptocurrency, if we can call it a security, currency, whatever. I'm not going to have that debate in this video, or a stock. So think about that for a moment. If somebody has $50,000 of Tesla shares, but half of that is margin, well, when they go buy another $10,000 of Tesla shares on margin, and they go to $60,000 of Tesla shares, but now $35,000 of margin, what have they done? They've put upward price pressure on Tesla stock because they're a buyer of stock or a buyer of shares. So they're taking shares out of the market, which supply and demand means price goes up. Obviously not on this small scale, it's not going to make a difference. But the point is, when somebody then instead says, hey, I've got an extra $10,000 for my job or whatever, and they decide to pay down their margin from 25K to 15K in that example, what happens? No price pressure on the stock. And for anyone else, like the next dude who's like, man, these stocks have been trading sideways for a while, or they just haven't been that good. You know what? I'm going to sell to reduce my margin. What happens? Again, less price pressure on the stock. If anything, you've just created more selling pressure on the stock and prices go down. So this period of deleveraging is not just something that we're going to see in crypto, but it's also something we're seeing in stocks. And it doesn't surprise me. And to me, I would not be shocked to see a very not only volatile, but potentially sideways trading market over the next 6 months as we wait for inflation data to actually come in to show, okay, are we inflecting up and are we staying up? Because don't get me wrong, we have inflation. Inflation's going up. But is it going to stay up, or is it going to inflect back down? Or is it going to accelerate to the upside, to hyperinflation, right? We're going to be on standby for that. It's potentially going to lead more people to want to pay off their margin. In addition to that, the more people pay off margin, the less pressure we have on stocks and cryptos, which mean values could come down or at least trade sideways. So the big warning, or the big bottom line of this whole video here is, if you're exposed to leverage, or you're expecting really quick returns like we kind of had in 2020, you probably would be well served to consider reducing margin. And I know that kind of exacerbates the problem that I'm talking about here, but in fairness to all the people who watch and support my channel, I just want to be upfront. Like, that's probably what's happening, and some part of that is probably very prudent to reduce debt. But in addition to reducing that debt, it's also probably prudent to consider we're not going to see those crazy returns, at least not yet, They'll come, and they'll come quick. This is one of the reasons I don't want to sell, but we might not see those crazy returns as quickly as we've been used to. The big question is, okay, well, does that mean do we just sit around and stay in stocks, or do we sell, pay off debt, and then buy back in when things turn around? Personally, I don't like doing that, because usually when the turnaround happens and all of a sudden SPACs and cryptocurrencies and everything really starts rallying again, usually it's too late when you're like, oh, it's starting to rally again. It's like, yeah, well, it just had its 30 or 40% rally or whatever, right? Usually it gets too late. So this is why generally I like to be in my stocks. I like to be in my Bitcoin or whatever positions that I'm in. So that way, when the run comes, I'm ready. But in the meantime, I'm going to be patient, and I'm going to pay off margin. If I've got margin paid down to levels I'm happy at, I'm going to go shopping for some specific deals, whether that's in sell-off periods in crypto or in SPACs or certain other stocks. Anyway, sort of my thought here on a Sunday here. Hopefully you found this helpful. If you did, consider liking and sharing and subscribing. And folks, we'll see you in the next video. By the way, check out the programs down below for a ton of perspectives on building your wealth. So if you want to learn all my perspectives for building your wealth with real estate investing, stock investing, managing your money, property management, sales, or even making YouTube videos, check out the link down below and use that coupon code to the moon. Thanks for watching, folks. We'll see you next time. Bye.